Good evening and welcome back to Be Rich. Yesterday was very bad for the Americans and the American stock market. Wall Street really bled as inflation numbers came much stronger than what people expected. Inflation in America came at 8.3%. Core inflation came at 6.2%. What does this mean for America? This means interest rates are set to go up further. It looks like sometime in next year, interest rates will reach 3.5%. This means government 10-year treasury yields will be at 5.5%. This means that America cannot have a soft landing, that the Fed will have to engineer a deep recession in America and people have to suffer for the consequences of what the Federal Reserve did over the last 1 year. Maybe the Fed should have started to tighten 1 year back and this consequence could have been avoided. But nobody wants to remove the punch bowl when the party is going on full swing. It's only when it's obvious that people are drunk and inebriated that the punch bowl is removed. Even today, the Fed has not started to remove the punch bowl. All the claim was that this inflation is transitionary. Today, it is very clear it is not transitionary. This is a once in a generation moment because America has not had this kind of moment over the last 40 years. Most of these new hotshot fund managers have never seen anything like this. The people talked about SPACs, special purpose acquisition vehicles. People like Chamak Palpatia who talked about SPAC, those SPACs are now at more than 50% discount. You talked about the great tech revolution, companies which never made profits but were claiming that they would change the world. As interest rates started to climb north, these companies have been crushed. Even the bigger ones have been crushed. Tesla was down 7% day before yesterday. Apple collapsed yesterday, relatively. Apple, which was the most valuable company in the world, lost that crown to Amazon. This is in spite of Apple showing record profits and record shipments and record consumer demand. The worry for Apple was that the Chinese would not be able to supply the complete requirement for the Americans. The Chinese government has imposed a very strong and strict lockdown, and means there is more trouble. But there are some bright spots in the US economy for those who are watching stocks. The index is not reflecting the real pain. A company which I have been wanting to own for a long time but have not been able to because it's been very expensive is a company called Disney. Disney has gone from strength to strength. It has acquired Pixar. It has several theme parks. It dominates the movie industry. It has a great library and it has acquired the properties of Star in India and overnight has become the most dominant entertainment player in India. It launched streaming services very late, much after Netflix has become very successful. The general talk was that it would give a good run for the money to Netflix. But I had a different view. Netflix has limited content and it was not only a carrier of content. Netflix decided to move into areas by producing independent content. Other people like CBS, Sony, and Disney decided to withdraw their products and launch their own streaming services. When Disney launched its streaming services, we knew it would be extremely successful. Sony, where it had the IPL rights and the international cricket rights. The Disney Hotstar streaming services started to do extremely well. While Netflix said that it would lose customers and it can lose up to 2 million customers in the coming quarters, Disney was very confident that it would add more customers. The expectation was that Disney would add about 5 million customers. But the results that came in the latest quarter show that Disney added 7.9 customers. That is 50% more than what Disney itself projected. Immediately, Disney CEO said that very defensively that the market should not expect similar kind of results going forward. In line with what was expected, Disney stock fell yesterday by $2.26. Today, Disney is trading at 105. Disney is now down 40% over this year. But if you look at 6 months, Disney is nearly down $55. But I want to go back to the 2020 lows. Disney was at 96. So thus Disney is only $10 below its historic low of 2020. What is going for Disney is the enormous library it has, the enormous amount of studios it has. It has Marvel, it has Dreamhouse, it has Pixar, it has the wide range of things. Demand in its theme parks also are doing well. After being shut down for 2 years, Disney's theme parks are running full as people are engaging in reverse tourism. So the going looks good for Disney. The market is extraordinarily doing well. But you markets are always discounting the future. The future looks bleak because as inflation rises and wages don't keep up with it, inflation begins to bite and people sacrifice entertainment first. Therefore, the second half of the year is not going to be as good as it was for Disney in the first half. So, the prices will correct. I expect Disney to go below its 2020 low, but I am waiting. In case Disney hits about $80, which I expect, then the price of Disney becomes very attractive and people like us can pile on. But one has to remain patient as the market corrects and punishes us for the excesses we have done over the last 20 years. This kind of punch bowl economics started with the fall of the tech bubble. When the tech bubble burst, Alan Greenspan started it. Ben Bernanke reinforced it, and Jerome Powell only continued it. It's now for some Jerome Powell to become Paul Volcker. This would mean a heavy drop in prices. But there is light at the end of the tunnel. As Buffett keeps telling us, the stock market is a bet on a slice of the American economy. Let's wait and watch. Thank you for watching. Be rich. If you like this content, kindly subscribe to my channel and turn on the bell notification. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.